TED Talks YouTube channel. I am here with AJ and Kevin from Fountain Hill Developments. So we are in a show home, as you can tell by this very nice wooden table here and the layout ready for food. We're going to talk about risk versus reward in developments, because everyone wants to talk about the reward, which is lots of zeros, lots of pound signs, lots of bags of cash on the table. But in reality, there's a lot that goes into that, right? So you're both experienced developers, both experienced in your own fields within that as well. How do you feel, I suppose it's a very broad question here, but how do you feel about how much risk there is for the reward you get in development?
All right, well, I'll start from a planning perspective and then maybe Kevin can talk a bit more about the developments. Mm-hmm. So from the planning side, it's interesting because planning is notoriously inconsistent. It's quite hard to predict what the outcomes are going to be. So I think one of the challenges that we are all faced with as developers and planners is not really knowing exactly what it is that you're going to be able to get approval for. And even if you've got something in your head, a number of units, a size of units, a specific layout, you don't always know what the council are going to say to you afterwards and what they're going to knock you back down to. So big part of that is negotiation, and there's always a lot of risk within that side of things. So when we obviously come at an opportunity, we have to balance out, a sort of a feasible range. What's the upside and what's the downside in terms of what we might be able to get on a site. So that's a huge factor, and it's just very, very difficult in planning because you never know what the outcome's going to be. And I think the other thing when it comes to the sort of my part of the business that I look after is more around sort of finding land, getting the planning consent, and then obviously passing it to Kevin, is that if we don't get planning, it's a total loss. So whilst relatively speaking it's less money that's required in order to get planning consent, it is still money that is liable for a total loss, whereas at least with property and the development side, you are building an asset there. There is a sort of a programme of works. So that's always something you need to weigh up. But I think overall our attitude is that we've plugged the two parts of the business together. So we've got land and planning combined with developments, and that end-to-end de-risks the whole process, because what we do up front in the land and getting the planning consent and creating margin through planning then translates over to Kevin's side. So that's a big way that we tend to de-risk things.
Yeah, I think from my side, part of the risk is AJ and what planning what planning is going to get for me. Seriously, we've got to be getting the right planning. So what we've discovered is that we've got to work really close together on the element as we get in the plan. What kind of plan do we want to get? So AJ's looking at this is what we can get you, Kev. Well, let's try and move that around slightly to get something that's going to be really easier to build and sort of de-risk it from that element. We don't want the wrong planning, so that's really important. And from a practical point of view, the risk for development is always in the ground. So if you pick this house up and you move it to any site, it will cost you pretty much the same to build anywhere in this locale. But what really the difference is always going to be what you're building on. So what's the ground like? Is it contaminated? Will it take the level of the weight of the building? Do we have to pile it, or is it just going to be standard trench fill foundations, which are a lot cheaper? What's the water like in the area? We talked on this site about it was huge the amount of work we had to do to control the water. So the risk is always in the ground and the locale, whereas the building is relatively easy to de-risk. Sometimes with the design you can make it simpler. So I'm always looking, because of my background in running a design and build company, how can my guys build this easier? We don't want something that's complicated. We don't want to be putting complicated steels in there that we've got more trades involved. So simplifying it de-risks it. So that's how we try and de-risk from the development side.
And would you say that the rewards of development are equal to the risks, or does it still feel like we put a lot on the line?
Yeah, I'm conscious we didn't talk a lot about the rewards there, did we?
Well, that's the reality.
That is the reality. I mean, I think when you're in the trenches, you do tend to focus a lot more on the risk, because that is the nature of this. It's a risk business, right? So our day-to-day is managing risk on both sides of the planning and development equation. but certainly the rewards are there. It's, you know, fundamentally, you hear it a lot, feast and famine. Development is very lumpy when it comes to income, and that's something that we're trying to strategically plan as a business so that we don't sort of just jump from project to project with payouts and then rolling money back in and as well. So I think cash flow forecasting and understanding that side is really crucial, not just looking at the reward as a big lump of money, because you know, as you scale and grow a business, it's not really prudent just to say, well, look, we've made a good amount of money here, let's move on. You need to manage that money.
Let's get a new car.
Really, well, absolutely.
You've got to put it somewhere.
But even so, you could even end up spending it back on your business again.
Yeah.
But without having, you know, prudent and well considered cash flow forecasting, you can spend it on your business and blow it. Right? So I guess the thing about the reward is that you just need to be very, very sensible with it, and especially as you've gone through hardship into getting that point. And I think our, you know, general time frame is even longer than most people, because we effectively double up. We do, let's say, a year or two on the planning side and a year or two on the development side. So we have to manage bigger gaps. Right, ultimately the profit is usually more secure and often larger, but at the same time is a long period of time that we have to manage the time between it. So you know, the rewards are good, but they're far apart.
Yeah.
And you know, I think any sensible strategy involves trying to fill those gaps a bit more, and I think over time we're looking at, you know, filling that with more sort of cash flow assets and things like that with the business, rather than just sort of chucking the money back in again and turning the wheel.
It's a very lumpy business, so you will only get your chunks of cash obviously at the end of a long period of time. But you know, risk and reward is very much about if you control the risk, and we were talking earlier about you control the risk before you start on site. Once you're on site, it's too late.
Yeah.
So all your reward is going to be made before you even start. It's kind of slightly sort of counterintuitive. You do have to wait a long time for it, but it's going to be made before you start. But I think there's definitely good financial reward. There's also, it's very fulfilling to build houses, and I think that should be remembered as well. We're up the site, and you know, there's a lovely couple moved in. It's really nice to see them. You know, Harry and Emma, fiancés, will be getting married soon. It's their first home, so it's actually a real privilege. It's quite humbling to build these houses for people. And for families to build a lovely community here, I think. You know, it's going to be a really great place for people to live. We've, you know, put our heart and soul into creating good homes for people, and we really want to carry on doing that. And so there's a real reward in that as well. And I think the financial reward is definitely there. Control the risk. That's definitely going to follow. We're in a good industry for that. But I think also it's very fulfilling. You know, we're sitting in this house now that previously, like 3 years ago, was a bit of mud. So, you know, it was a scaffold yard. No one could see it. And it's through, you know, AJ and Andrew's vision and my skill that we've created this wonderful development, and we're really proud of it.
I think that's something you forget, right? Because you're in the trenches, like you said, you're like fighting this person, dealing with this idiot, trying to get this done, but you don't zoom out and think, hold on a minute, this was mud. And now it's a house for someone. It's you know, there's a story behind it. Just to quickly end on more risk, what about finances in terms of you're signing personal guarantees for banks, you're taking on millions of loans from banks? Does that ever faze you? Or is it just normal and part and parcel? Because it is a risk.
I mean, these things are the drivers, right? These are the things that drive you to be as risk averse and to manage the risk in the way that we do. So I think they are part and parcel. All businesses come with a degree of risk, right? Admittedly, development is quite a capital intensive business, but by the same token, I think when you look at it and you look at the banks, right, they're lending you, you know, millions of pounds, and they also need to be very sure that that money is safe, because they're only charging, you know, relatively speaking, 7-8%, right?
Which is not a lot given
which
what
is not,
we're doing.
No, and that's the thing. So it's an appreciation on our side, the understanding the workings and the mechanics of financing stack and financing industry, that they have to be very secure. So those elements are the realities. But they're ultimately what drive us to make sure that we manage the risk, and we always looking at the downside. I think there's the old saying, you know, manage the downside and the upside will take care of itself.
Mm.
And that couldn't be truer in development, I don't think.
And I think when you've got your own skin in the game as well, which the banks always want to happen, and I think for good reason, definitely sharpens the mind when you're going through the spreadsheets, right? You really, let's just go through that one more time and let's just make sure, because this is investors' money and it's our money, and let's just make sure this is really safe.
Yeah.
It really kind of sharpens you to make sure you've got the right numbers in there.